Hello and welcome back to the last session of our Capital Markets Day. We're going to hear from another two business areas. And we're starting off with industrial automation, where we have Peter Terwiesch, and we also will have Brandon Spencer with us online from the US. And without further ado, I will hand over to Peter. Please go ahead.
Thank you, Ansi, and welcome to Industrial Automation, where we serve the process and hybrid industries in their quest for ever safer, smarter, and more sustainable operations with automation, digitalization, and electrification. I'll walk you through our portfolio and plans, and then we'll take a closer look at energy industries, which isn't only our largest division, but which is also an industry that in particular is going through a transformation globally. And then we'll find time for your questions. As a leader in process automation and in process electrification with growing momentum in digitalization, our mission clearly is value creation. We serve our customers with leading solutions that we support over the life cycle of their investment. That value for customers translates into value for shareholders. We target 14% as the middle of our profitability corridor by 2023, while continuing to deliver robust returns on capital in the upper 20s by focusing on quality of revenues and business that makes sense for both our customers and ABB. Let's take a look at the industries that we serve. Safety, productivity, and sustainability are common goals across these industries, and integrated automation solutions, often combining process and power management together with a growing share of digitalization, are essential to realize these goals. This is the business context for our 5 divisions, and all 5 hold leading positions. 3 of them, energy industries, process industries, and marine and ports, combine an integrated automation and electrical system offering that is differentiated by industry-specific products and complemented by services over the long life of these assets, which is typically measured in decades. In turbocharging and in measurement and analytics, we deliver products, again supported by services over a long life cycle that enhance and extend the value of these investments for customers. Björn already mentioned the turbocharging business is earmarked for exiting at the right time and in the right way for ABB, for our customers, our employees, so we will have work to do there going forward. Let's take a look at the markets that we serve. Several sectors that we serve are quite cyclical. So on this chart, when we look at growth rates, we look at through-cycle growth rates. The sectors in the lower part are likely to grow slightly below GDP over the cycle, and at the same time, our offering fits well with their focus on safety, productivity, and sustainability. So still there is an opportunity to capture an increasing part of their spend. Sectors in the upper part, are likely to grow more. Across all the industries we serve, we meet fairly consistent expectations. There is a capital investment phase where customers, for their capital investment for their project, look for reducing cost, schedule, and risk. And once then the asset goes into operation, customers look for continuously improving. And that is basically the safety, the productivity, the asset life, and the environmental impact that are then key. Here's a recipe for success in serving these industries and customers. We continue to invest in our leading technology positions. We use our strong domain knowledge we hold in many of these industry verticals that we serve, and we combine that into integrated solutions for customers where we take physical and digital building blocks, our domain expertise, and the engineering and service competence that we have around the world, in person and digitally, remotely, in a virtuous cycle where sales comes after service and service comes after sales. At the heart of process automation is the process control system, the distributed control system in serving the process and hybrid industries. It's really the heart and brain of our customers' operations. Our customers have helped us to not only remain the global #1 in distributed control systems for now over 20 years, but to even increase our share over the past decade, honoring our concept of evolution without obsolescence that protects their investment that they make in ABB technology. We have the largest scale in DCS, and we match that with strong industry-specific offerings. Plus, we're excited about DCS as the nucleus for our growing digital offering. Let's look at a typical integrated systems offering as we would deliver it in energy industries, process industries, or marine and ports. We internally source for more than 500 million electrification and motion equipment. We then use our control system as an integration platform. We add industry-specific anchor products like our Azipod propulsion that Björn already mentioned in his introduction, gearless mill drives or paper quality control systems, generator, excitation, whatever the industry specifically is that we are serving. And then we add our domain expertise and engineering competence to deliver successful projects. Executing these projects professionally translates into an asset-light, high return on capital business for industrial automation with significant value generated also for ABB's motion and electrification businesses who have the margin on the product. By 2023, we aim to increase our margin to 14%, the middle of our corridor, and even further increase our already strong return on capital employed to around 29%. We are confident to get there by prioritizing quality of revenues before growth, which means focusing on high own value added business and being able to say no to projects that have too low an ABB content to make sense for us. To calibrate where we are going to, let's look at where we have come from. And let's look first at 2013 to 2015, where interestingly in 2014, the oil price collapsed from $110 down to $40 a barrel. And you can see we held our margin. 2016 to 2018 then, we started to really intensify the focus on execution, on the quality of revenues, the same levers I mentioned now, and we exited the EPC business that we had. We increased service, and we professionally executed our projects, all contributing to higher margin realization. Then, unfortunately, came the setback in 2019 around conventional power generation. And the market in conventional power generation went down faster than most people, and I include myself in that, were seeing it coming. So we felt that twice. We felt that in turbocharging, where stationary power generation is actually a second largest market sector. And we felt that strongly in power plant automation, which we had internally taken over in 2016. And that all was worsened by the Kusile power plant project in South Africa, a project that ABB took an order for in 2015, on which ABB then self-reported suspicious payments to the authorities in 2017. We haven't previously published it, but here's a number that we are quite proud on, because through all these years, through all those ups and downs of the markets we are serving, we have produced a consistent return on capital employed in the upper 20s. Now, this year, 2020, unfortunately, puts us into a perfect storm. We're still working on overcoming some of the 2019 challenges, while the coronavirus disease is the first crisis in my lifetime that disproportionately affects service, which normally is the most resilient in this portfolio. But because of mobility constraints related to lockdowns, we've also suffered disproportionately on service. And in addition, the combination of the coronavirus disease and its consequences for our customers, together with the lower oil price, have really also cut into our customers' operations to different degrees. I won't go into all the details, but if you look at this conceptual slide where you see on the horizontal axis the impact that the coronavirus disease had, you see most pronounced that, for instance, cruise vessel operators in our marine and ports business, they, of course, hardly operate any parts of their fleet in this period of time. Hence, also their service need has declined significantly. While at the same time, if you take the oil and gas price impact, of course, our energy industries business, but also other parts would strongly feel that. We are navigating this storm. We are keeping our people safe. We're staying close to customers. Now, a lot more through digital meetings than physical meetings in this period. We're trimming our organization with a combination of permanent and temporary adjustments. And we're increasingly interacting digitally with customers. And I'm confident that we will not only weather this storm, but we will ultimately come out stronger, as the crisis is also a catalyst for increasing the speed of digitalization in industry. Here's in quite some more detail how we work our way back into and then towards the middle of our margin corridor. The first part is overcoming the Kusile and COVID headwinds. If you just take out Kusile of the last 12 months data, that already puts us back above 10 percentage points margin. But the bigger part here then follows to get us towards the middle, which is really a focus on quality of revenues and further strengthening our execution, including our productivity, and continuing to grow our services, including digital, while continuing to invest in technology. And again, there, digitalization is a key part of it. In going this path, not everybody is going exactly at the same pace and with the same priorities. In line with the framework of stability, profitability, and growth, our different divisions have different mandates, and 3 of them are out to improve performance, which means margin is the first priority before volume, and 2 of them are on the growth trajectory, i.e. start from a margin basis that is already reasonably strong, but are growing their volume as the first priority. But that's a simplified picture, of course, because even below the division level, we clearly manage our offering portfolio as a continuous process. So our portfolio is not cast in stone. This is something we work and rework on with differentiated priorities as a function of the attractiveness of a business and our ability to perform. Now, there's one area across all our divisions that is really a priority. So let me talk a moment about our digital portfolio, where within the category of purely digital, so the software and software as a service, we look at 3 different categories. The first one is digital services around equipment that we have delivered, where often we basically differentiate the hardware that we've delivered through a software offering that comes on top. A second is the digital system solutions, where we take a more holistic approach, very often on the basis of installed base of distributed control systems, based on operations data and know-how that we have about the domain in 5 value driver families. And this summer, we started into a third category, a push beyond the operational technologies, combining, contextualizing, and analyzing data across operations technologies, engineering technologies, and information technologies. And of course, across all that, we support our customers with cybersecurity services, and we help them with remote expertise in what we call collaborative operations. Let's look at examples and financial numbers behind digitalization. Here, the underlying challenge is that natural gas leakages are both a safety hazard because of the risk of explosion and an environmental hazard because methane is a potent greenhouse gas. That translates to a need for customers to localize leakages for oil and gas companies and gas utilities. And we have a hardware product that is a gas analyzer, but rather than installing it in a fixed way, we now mount it on cars or even drones, and we add location information, capture wind speed, take digital maps, and through all that, localize leakages exactly. And we call that ABB Ability Mobile Guard, and offer the customers the choice of either sourcing the information as a service or buying our equipment and licensing of our software. When I talked about collaborative operations as a means of digitally providing expertise to people who are out on a marine vessel, a rig, in a remote mine or mill, through a combination of people and algorithms, let's have a quick look at this video.
The world is changing. There has never been a greater need for remote-enabled expertise than right now. What if we could connect people, our experts and customers, in different places, no matter where they are, through integrated technology for safer, smarter, and more sustainable operations? ABB Ability Collaborative Operations does this. Collaborative Operations is a suite of digitally enabled solutions and services supported by a network of centers operating 24/7 around the globe. ABB experts interact with customers using analytics and algorithms to monitor assets, processes, and risks, jointly derive insights, and recommend actions to optimize operations. From energy production on the seabed to the most remote mines, to vessels in any waterway, ABB Ability Collaborative Operations, transforming the way we work with customers.
I mentioned the third category in the pure digital area, and this is exemplified by the recent launches this summer of our ABB Ability at Genius and Genix offerings. Analysts estimate that in our industries, at best, 20% of the data are being used, and that there's up to 40% productivity potential through industrial analytics and artificial intelligence in this area. So this summer, we launched this offering, and at Genius is really our operations data manager that makes the data from the real-time control system available for such analytics. And then Genix, our industrial analytics and AI suite, integrates our domain, digital, and automation expertise with analytics and AI. So it combines, contextualizes, and analyzes data from operations, engineering, and commercial IT systems for actionable insights and faster decisions. If we zoom back out, here's the overview of what we do in digitalization. Our digital strategy starts with customers and their needs. We manage the three categories that I mentioned. Based on the inner workings of our offering on the cloud and edge level, including the ABB Ability platform, we manage on behalf of the other business areas also, so we do this collectively. And the new launches I mentioned, all ingesting and contextualizing data from products and systems installed in the field. I realize digitalization, to many of you, at times risks to sound a bit virtual, but the business is real. So I'm proud to share some numbers here. On top of the several $billion that we have in digitally enabled business, which quite naturally comes if you're in the automation business, we have built a $400 million business in selling software and software-based services organically, which means we've doubled this in just the last 3 years. And simply because we saw a better payback in taking that organic investment relative to spending that money externally. We won't rest on this, obviously, but we have a double-digit growth ambition also going forward. Again, mainly organic, but potentially including some bolt-on acquisitions for competence or acceleration. Finally, together with safety, sustainability is an important part not only of ABB's purpose, but also of the license to operate of our customers. Our automation, electrification, and digital technology solutions help our customers successfully manage the energy transition, increase energy efficiency, and reduce their environmental impact by more sustainably using resources, including by low carbon mobility. Björn mentioned our electric and hybrid propulsion in marine. I already mentioned the gas leakage detection. You have several other examples here on this slide, and we could do a whole presentation just on that. So to conclude, we're committed to create value, to deliver a consistent upper 20% return on capital employed, despite the cyclical industries that we serve, target a 14% profit margin by 2023. Let me now hand over to Brandon Spencer, President of our Energy Industries Division, to share both his excitement and his plan regarding how we can help our customers to make their operations safer, smarter, and more sustainable in an industry that is transforming while creating value for ABB. Over to you, Brandon.
Thank you, Peter. I'm really pleased to be here today to talk on behalf of Energy Industries, to share a little bit about where we're going as a division and how we drive value internally and also for our customers. What you see on the right-hand side of the screen here is where we're going as a division. We're going to drive our profitability up between now and 2023. We're going to continue to drive our impressive return on capital up between now and 2023. And you've heard Peter talk about it. You've heard Björn and Timo talk about it, some of the other leaders. Profitable and stable before growth. We're not going to give up on growth in Energy Industries because there's absolutely opportunity for us, but we are going to focus on making sure that we're profitable and stable. So how do we do that? If you look at the left-hand side of the screen, it's about being a leader in automation. It's about driving innovation forward. We're a technology company. What can we do in order to continue to drive a carbon-free society? Even in our traditional businesses, where can we help with that, along with other parts of our technology? It's around innovation in digital. So digitalization, you heard Peter talk about the $400+ million as part of industrial automation. $200+ million of that comes from Energy Industries. And those are pure digital plays, not our DCS offerings and other things, but pure digital business. And lastly, we're going to live to the ABB way. We're fully empowered to deliver the results. We're fully accountable to deliver those results. And I'm going to step you through a little bit in this the next few minutes about how we intend to do that. Really excited to talk about this slide. This is not yesterday's news. This is today's news. These are wins that we've had since COVID, since the perfect storm that Peter talked about. We talk about oil price volatility. We talk about demand shock. We talk about COVID. Kind of the perfect storm in our business. These are wins that our teams around the world have done where we're driving value for our customers. And as you work around the chart, you see pure automation business where we're providing the intelligence and brains to run these kind of facilities. You see electrification projects where we're working together with our brothers and sisters from EL and from Motion in order to deliver a superior value to the customers. You see our digital solutions, again, pure digital solutions where we're taking data, driving connectivity, and driving value together with our customers. And last but certainly not least, the environmentally friendly offerings. So yes, we have the conventional parts of our business in power gen and in oil and gas, but we also have other avenues and other markets that are opening up and are growing in a way that certainly offsets what we see in the downside of our conventional businesses. Really proud of the team, really excited to show the highlights of what we're doing around the world. As I said a little bit, we've got diversity in our markets. And so on the right-hand side, you see we've combined power generation, water, oil and gas, chem and refining, the midstream portions of our business, all of those together, which allows us to have pushes and takes against what's happening in the market. You see where there's some growth rates that are happening that are higher than others, and we certainly are confident that the growth rates in some of the emerging segments outweighs the downside that we see in some of our conventional businesses. When we talk with customers, when I talk with trade media, I'm constantly talking about oil price cyclicality, about the demand for sustainable energy. What does it mean for the customer as they transform and transition their businesses as part of the energy evolution that we're going through? And certainly around digitalization. Our customers are going through it internally, which is really important. ABB is doing it internally, which is really important. But how do we work together, bring in other parties from the ecosystem that play in this space in order to truly drive value for both organizations? And we'll touch on that a little bit as we continue forward. We've talked a little bit about the industries, and really my takeaway for this slide is what Peter talked about in his presentation. We serve all these industries, the conventional power, the oil and gas, what we see in alternative energy and where those markets are going. Water, a really important market for us where we're seeing double-digit growth in 2020, and we expect to continue to see that as we go forward. And what are we doing for those industries? We're all about making them safer, smarter, and more sustainable. So whether that's the way we deploy our technology, whether it's the solutions that we bring, the services that we wrap around it, or the digital connectivity that bolts it all together, it's about making our customers' operations safer, smarter, and more sustainable. What you see here is our portfolio. It's a little bit of a complicated slide, but we want to be transparent with everybody that's watching today. So I'll step through a little bit of detail in terms of hoping to explain it better. What you see at the top is the markets that we serve, and important to note is that we go to market with a multi-channel approach. We believe in EPCs, the engineering companies, end users, OEMs, channels, all of these ways to get to market because we want to sell to customers the way they want to buy from ABB. What are we selling? We're selling automation, we're selling electrification, we're selling digital connectivity, and we're wrapping service around all of those. Service is over 50% of our revenue, so it's a critically important part of our business and certainly a growth engine for us as we go forward. Automation is our core business in the middle of the chart. That's our anchor product. All of our platforms, our current platforms, as well as our legacy platforms. And then we have the specialty portfolios at the bottom of the chart. These are areas where we're market leaders, and these businesses sit within energy industries. So we have responsibility for the product development, the roadmaps, the marketing, the go-to-market, all of these elements we have responsibility for. The bottom right-hand side of the chart, also important. We do a lot of pull-through volume with our brothers and sisters in EL and in Motion. It's critically important for us because we're delivering solutions to the customer. And so we want to make sure that we provide best-in-class technology, domain expertise, project execution, all of these things. And where it's not part of ABB, we work with third parties in order to make sure that we can deliver that turnkey solution that drives value for our customers. So let's talk a little bit specifically about automation, winning in greenfield and in brownfield. Very important for us, and there's three pillars that I want to focus on. The first is technology. We want to be innovative and continue to lead in technology. So whether that's new product offerings, whether that's Edge Genius and GenX and the digital connectivity elements that we talked about, all of those things complement our strategy and the strategic pillar for being a leader in technology. Technology feeds into execution. Execution in our markets is critically important, whether it relates to safety, the environmental impact, costs, schedule, risk. I'm very excited to share with you all that we launched a few weeks ago, ABB Adaptive Execution. We're going to play a short video for you here in a second, and in that video, it shows what are some of the elements that wrap in to adaptive execution. Peter? I get absolutely charged up every time I see that video, and it's really exciting what we're doing there. It wraps around people, around process, around technology, and around infrastructure in order to deliver costs, quality, and schedule to our customers. There's a benefit inside ABB as we modularize things and streamline and standardize what we do in order to affect quality and drive profitability. There's a benefit for our customers around the CapEx side into the operating side, and certainly around the quality that they receive. Really excited about the launch of this program globally for us. Last but not least is services, being the life cycle partner. Peter talked about the duration of these projects. The capital side of the project can go 2, 3, 4, 5 years until the technology is deployed. Then it runs for the next 20, 30, 40, 50 years. Service is our intimacy with the customer. That's how we connect. COVID has certainly been a catalyst for some of this connection and digital connectivity, as Peter touched on with the collaborative operations centers. We will continue to drive value and find strategic offerings that we have which really help ABB and our customers to be more productive as we go forward. We talked about environmentally friendly solutions, and I want to dive a little bit deeper on that. As Peter said, we could give a full presentation on this topic, but I want to show some real examples of where we're doing it. Again, when I'm talking to customers, we're talking about resource efficiency. We're talking about new energy models, renewables, hydrogen, carbon capture, all of these different types of potential energy sources. And we're talking about a responsible use of resources, like we talk in water all the time. So what's ABB doing about it? And specifically, what are we doing in IAEN, in energy industries, about it? On the right-hand side, you see a couple of examples, and they range from electrifying the seafloor. So you're taking off a gas turbine from the top side of a facility, emitting carbon, and you're electrifying the seafloor, driving up reliability, availability, and reducing the environmental footprint. The first green hydrogen facility in Europe. ABB is providing the intelligence around this facility. In Bangladesh, a solar facility where we're providing intelligence and digital solutions as they diversify their power generation sources. And last but not least, and really important here, is that we don't just talk about it externally, we are about it internally. This is a collaboration story between ourselves and EL, where we make an ABB facility carbon neutral. And this is done together with products from our brothers and sisters. My division is providing some of the intelligence and digital applications. And so I think it's really important that we focus on that we're delivering these solutions to ourselves. And so there's clearly value in there that we can deliver to the customers. I touched on digital, want to give a feel for where we are and where we're going. $200 million plus in terms of the revenue portion of energy industries, an impressive CAGR, so an impressive growth rate that we've had in this organically, along with some partnerships that we continue to use to drive and serve value to the customer. Where are we going? We're going to double this business. So I mentioned profitable and stable before growth. This is an area of growth for us, and it's an area that helps also drive profitability for ABB and value for our customers. And so whether it's our own niche solutions, whether it's wider enterprise offerings where we're connecting different customer sites, or whether we're just driving efficiency, all of our solutions with ABB Ability, with GenX, with Edge Genius, and with our homegrown solutions that are part of Ability in IAEN, we are focused on delivering value through our digital growth. Quality of revenues is a theme that you've heard today. And stable and profitable before growth is a theme that you've heard today. This is what it means in IAEN. We manage our portfolio annually, which you see on the left-hand side of the slide, and we'll continue to do that. Are we the best fit? Is this product, is this market where we want to play and where we can add value? What are we doing about it? We'll target growth, whether it's in service, whether it's in channels, whether it's in digital, some niche places where we play in specific markets, we'll target that growth. We're going to work on some of the hygiene elements of our business as well. So whether that's units that are underperforming, for example, we're going to fix them. Products where we aren't exactly at the margin corridor that we want to be at, we're going to address it and we're going to get it to where it needs to be. Our operational footprint, all of these kind of things go into that hygiene category that I just mentioned. And lastly, some bid selectivity. We want to make sure that we're focused on winning in markets where we can deliver value to the customers and we can get paid for that value back to ABB and thus to our shareholders. We'll do all of this by leaning into the ABB way. What you hear Bjorn, Timo, the rest of the executive committee talk about externally is exactly the messaging that comes internally, and we fully support it. We're adopting it, we're implementing it, and we're going to help use it to drive results. The decentralization that you hear is real. The connectivity to performance, whether it's through the scorecards, whether it's through the annual incentive plan, all of these things to truly drive ownership. We have a motto in IAEN called TEAM, which is transparent, empowered, accountable, and made simple. All of these fit perfectly within the ABB way. So as I close here, what you see on the left, that's my commitment to you. It's the commitment of my leadership team to you, and it's the commitment of our 8,000 loyal employees that are serving our customers every day to go deliver those results as we lean forward. With that, I hand it back to Ansi to start the question and answer period.
Thank you, Peter and Brandon. We now go into the Q&A session. And as promised earlier on today, we'll tune in Guillermo for his question to Peter. Please go ahead, Guillermo.
Thank you. Thank you again, Nancy. And question to regards to process automation and I guess portfolio management and going back to the issues of low growth and low market positioning. I was wondering if apart from turbochargers, you can actually do more portfolio optimization with, for example, instrumentation or OGC, or is it the case that the synergies from doing that portfolio optimization are greater than the potential, uplift that the group will do by doing some actions over there? Thank you.
Question, Guillermo. And I think it's important to emphasize how we understand and how we live portfolio management. There's always a question, and the framework was shared earlier by Björn and Timo. That's a framework we use consistently across ABB. There's always the strategic attractiveness of a business and our ability to win. And we then look at how can we deliver consistent margin and consistent volume, but what is the delta we can make? And the delta we can make in two ways. Of course, we can make a delta by buying and selling businesses. And in this case, the exit in turbocharging is a delta was a business that is performing at a very high level of performance, very consistently over many years, but where we're basically not seeing under our ownership the ability to make a major on top delta, on top of that high performance that we have already. Whereas in some of the other areas, clearly by focusing on the delta we can still make. By example, adaptive execution, as mentioned by Brandon, further strengthening our execution in serving some of the markets that we are serving, by deploying technology innovation, by improving our operations and our factory footprint, by a whole range of such measures tailored to the specific part of the business we're looking at, we see us making a delta. And then also our portfolio evaluation isn't cast in stone. So we take that assumption, we make our plan, and then we see, are we able to make it materialize? And of course, in case we wouldn't be able to make the delta ourselves, then we would get back to your question in a year's time and see what if we can't do things organically. But with what we have, we see the opportunity to make a delta.
Thank you. And we have the next question from Andreas at JP Morgan. Please, Andreas, your line should be open.
Yeah, good afternoon. Thanks for the time. I have a question on the margin target, if you could clarify that. This morning, I think it was mentioned that the 14% would also need or include some M&A where you basically buy some higher margin businesses. We've talked about adding more devices to that process automation business for maybe the last 20 years in terms of, I think past management called it, having more products to hang on the kind of DCS Christmas tree. What has happened here on M&A, and is that still a focus? And why have you not been able or willing, or it didn't happen in terms of all these add-on acquisitions maybe that we talked about over time?
Thank you, Andreas. And indeed, there's always, with portfolio management, not just the what will we stop doing, but what will we start doing question. So what can we create synergies with? For the time being, I think a big delta that we are in the process of making, and where I disclosed some numbers, is in digitalization. And there we basically looked at the odds of doing it organically, investing a part of our margin in that organic growth that I was able to show you for this area, rather than actually spend a lot of money outside and then having to find a payback for that acquisition. So for the time being, I don't think it would be the right thing to go further into what exactly would we be buying. But clearly, as we're talking about an exit from a high margin business, we are wrapping our minds around what could come in its place, and not only be a great addition, but an addition that would help us make a further delta on.
But is the 14% margin target organic, or including an acquisition that replaces the high margin turbo business?
You already heard Timo's answer this morning, which was basically saying without turbocharging, the margin ambition clearly gets a lot steeper if we look at continuous improvement actions only. So that likely we would be looking at an acquisition to at least partly cover the gap that our most profitable division would be leaving. But I mean, we don't have the timing and the modalities on that. So at this point in time, we also don't know when this event will actually happen.
Thank you for that. We'll take the next question from Martin at Citi. Please go ahead.
Yeah, thanks. It's Martin from Citi. Just a couple of questions, if I can. The first one is just following on from the margin question. You do target a good increase in return on capital as well. I mean, again, would that include any goodwill and so forth that you would need to spend on acquisitions? And the second question was, we've talked about this in past investor days. Some of your peers have talked about ABB losing market share, but obviously there's many parts to the division, and some of those, like conventional power, as you say, have been weaker than expected. Has that growth differential simply been a mix effect, or have you seen any sort of end market share changes over the last 2 or 3 years? Thank you.
Thanks, Martin. These are two great questions. And yeah, let me emphasize on the first one that our return on capital employed is including goodwill. So we always look including goodwill, and that's the result of a track record of project execution and basically running our project businesses around a zero net working capital. So the balance of what we're getting from customers, what we're spending, the discipline in our execution is what actually allows these ROCE values to be as strong as they are. And I'm so happy to be able to disclose them here for the first time also. On your second question, we've heard one particular competitor very often state that they would be gaining share from ABB. At the same time, they of course look at the same market share reports as us, and I just included that in the presentation for the fun of it. In the last 10 years, there's no signs of us losing market share in distributed control systems. Several people have gained market share, including ourselves. Basically, 3 companies have. One has been losing market share in a major way. So I'm not concerned about that. But of course, with the journey that I shared in a bit more detail, where we exited EPC, where we did a few other moves, where we focused on higher ABB content in the portfolio, which was part of what I was talking you through as part of our margin uplift trajectory. In those measures, yes, our volumes reported in this business area have actually not developed in line with some of the others, but that's because we made a conscious choice to actually deprioritize certain business. So when it comes to the DCS proper, there's fairly good market research available there, and there's no evidence of this frequently made claim. So I would like to see some numbers next time I hear that, where that would be coming from.
Thank you very much.
That's a challenge for you, Will. We'll take the next question, please. Oh, no, that's from Will at Kepler Cheuvreux. Sorry.
Two questions. The first one is when we think about your strategy to grow in digital solutions and digital business over the coming years, how do you anticipate the success there? Is it mainly building on instrumentation and digital offerings to your existing systems like 800XA or Symphony, or do you also have a strategy to be able to attack or cannibalize attack some of your competitor systems such as Delta V or the Foxborough system? So where does the growth come from in digital, and do you have a strategy to attack the existing incumbent competitor systems? The second question is about measurement and analytics. When we look at the competitors in measurement and analytics, their returns are much higher than the ones that you are suggesting here. Are we just looking at the returns today being impacted by the cyclical downturn in a number of your end markets like oil and gas, or is there a structural difference in the returns you achieve in measurement and analytics compared to your competitors? Thank you.
Thanks, Will. These are two great questions. And if we look into the first one first, and in terms of the success in digitalization, I deliberately painted the picture of these three categories we are pursuing. The first being around the equipment that we've delivered, differentiated by software. The second, then, the system solutions around very typically the control systems and then devices that are out there. And I wouldn't think of it as attacking anybody's installed base. I'd rather describe it as adding value for customers who have a mixed installed base of different things, but they don't want to buy into digitalization in a captive way with this control system vendor or that one, but they rather look for proper digitalization that serves their need. So we think it from the customer and not from the point of what has been installed, but connectivity, of course, is important there. And then I described also the going beyond the operations technology space, which is really, rather than saying, yes, in digitalization, there's OT, there's ET, there's IT, and they're all different fields, how can we pull relevant data for customer decisions together and contextualize it and make that into insights and decisions for customers? So that's our strategy in digitalization. We have that by division, by each of these areas in numbers, but of course not prepared to share those at this point in time. When we then look at measurement and analytics, your question there, yes, I think it's clear that, especially on the instrumentation side of measurement and analytics, we're currently behind some of our competitors. And that's why we showed it in the transform category. Our portfolio management has shown the alarm light and basically said, let's do something here to get that into a better trajectory. And yes, the trigger for that has been partly cyclical. We've had some parts that were very successful in serving onshore unconventional oil and gas. So when that went down, we saw also our overall KPIs going down. But at the same time, yes, there is a structural element, and we're committed to really working hard on improving that.
Thank you. And with that, we're going to have to close this Q&A session.